Gold and silver may have lost their shine, but other metals are now glowing brighter than ever, hitting record highs after a powerful rally. Just imagine, while the whole world was fixated on gold and silver prices, a new story was quietly unfolding, one that emerged from the depths of the mines and shook the global economy. The markets were buzzing that gold had plateaued and silver sparkle had dimmed. Yet, in these shadows, a new surge was rising. Copper, aluminium, and zinc were reaching unprecedented heights. Thousands of investors who once chased gold and silver are now turning their attention to this new metal rally. The question is, why have these base metals suddenly become so valuable? Could they become the new gold? Or is this just a temporary spike that will soon fade? Every economic era brings a moment that becomes a golden opportunity for investors, and today, that moment belongs to base metals. Copper, aluminium, and zinc, once seen merely as industrial necessities, have now become the new pearls of global investment. On the London Metal Exchange, copper spot price has crossed $11,000 per ton, the highest in history. Aluminium and zinc are also racing upward, trading near record levels across global markets. These aren't just numbers. They're a reflection of the changing face of the world economy. Once, gold was considered the safest investment. Now, these base metals are being recognized as growth metals. Their shine doesn't come from jewelry or bank lockers. It comes from the future of technology, energy, and infrastructure. Several factors have fueled this massive rally in recent months: supply shortages, disruptions in mining, the rising demand for green energy, and a weakening US dollar. The closure of a major copper mine in Indonesia has deeply impacted global supply. That single mine accounted for nearly 3% of the world's total copper production. And since it may take over 2 years for operations to resume, the copper shortage in the market is only expected to worsen. Similarly, Chile's Codelco mine, the largest copper producer in South America, has announced that it will be operating below full capacity for the next few months. In Africa's Congo, political instability has also disrupted mining operations. This means demand is rising, but supply is shrinking, the classic economic formula. Low supply, high demand, higher prices. Now let's talk about aluminium, the backbone of the modern world. From cars to airplanes, from smartphones to solar panels, aluminium is everywhere. But China, the world's largest aluminium producer, has capped its annual production at 45 million tons to reduce environmental pressure. Meanwhile, Europe's Carbon Border Adjustment Mechanism, CBAM, has imposed additional taxes on aluminum importers. These policy shifts have forced companies to stockpile material in advance, pushing prices even higher in the global market. Amid all this, zinc isn't far behind. This metal, typically used in steel coating and large infrastructure projects, has now become the new star of global trade. Stocks on the London Metal Exchange are rapidly declining, meaning demand remains high, but inventories are running low. And when available stock drops, the market inevitably drifts toward panic buying. But this metal rally isn't driven by supply chain issues alone. There's a much deeper story behind it: the future of energy. The world is transitioning toward green energy. Electric vehicles, solar energy, wind turbines, and battery storage. All of these depend heavily on base metals. An electric car requires almost 4 times more copper than a traditional petrol vehicle. The use of aluminum and zinc in solar farms and wind turbines has now reached record levels. In other words, every time a country commits to achieving a net zero target, it indirectly fuels a massive rise in the demand for these metals. This is no longer just about industrial needs, it's about powering the global climate mission. Now let's look at the economic angle, the US dollar. Most metals are traded in dollars, so when the dollar weakens, metal prices naturally rise, since foreign buyers can purchase them at a lower relative cost. Recently, signs of stability in US economic data and interest rates have put pressure on the dollar, and that directly boosted the global metal markets. But that's not the whole story. The impact of this rally is now visible everywhere, on the profit margins of industrial companies, the production cost of electronics, and even the budgets of large infrastructure projects. Rising copper prices have made transmission lines and power projects more expensive. Higher aluminum prices have driven up costs in the packaging and automobile sectors. And soaring zinc prices have started affecting the construction industry as well. The situation has escalated to the point where many countries have begun building their own strategic metal reserves. Nations like China and the US are now stockpiling copper and nickel the same way they once stockpiled oil. This marks the beginning of a new era of energy security. Big investors are realizing that the world no longer runs solely on gold and oil. The real power now lies in green metals. And that's where a new investment cycle has begun. Many analysts believe that within the next 2 years, the global copper shortage could reach 6 lakh metric tons. If that happens, prices could soar to $12,000 to $13,000 per ton. Just think about it. A metal once limited to electrical wires and plumbing pipes has now become the soul of electric vehicles and solar grids. Take aluminum, for instance, lightweight, affordable, yet indispensable. From airlines to EV battery casings, its demand has nearly doubled. And when limited production collides with surging demand, prices shoot up like rockets. Zinc, once dismissed as an ordinary metal, has now become the backbone of the building sector. It's used to prevent steel from rusting, meaning its demand is directly linked to the infrastructure growth of every developing nation. Now let's talk about another crucial aspect: geopolitics. The ongoing trade tensions between the United States and China are also shaping the global metals market. The US has revised its aluminum trade terms with Canada, increasing the likelihood of new tariffs. Meanwhile, Europe is introducing new trade rules through its carbon tax policies. All these moves are reshaping the global metal trade. And the biggest beneficiaries are countries that produce metals on a large scale, such as Chile, Indonesia, Australia, and India. Speaking of India, this is a golden opportunity. The country is rich in mineral resources, yet its full potential in copper and zinc production remains untapped. Recently, the government has eased foreign investment regulations in the mining sector and launched initiatives to promote base metal processing under the Make in India for the World mission. If this continues in the right direction, India could soon become a hub of the new green metal boom. However, with every rally comes a word of caution. The prices of base metals can rise just as sharply as they can fall. This market is highly influenced by investor sentiment, supply shocks, and geopolitical events. A single mine closure can send prices soaring, but once it reopens, prices can crash just as quickly. Large funds and hedge groups often engage in speculative trading, adding to this short-term volatility. But the long-term story is entirely different. The world is moving toward decarbonization, and these metals are the foundation of that mission. Copper, known as the metal of electrification, could become even more important than oil in the coming decades. Aluminum is increasingly being seen as the steel of the future, while zinc is now considered the cornerstone of sustainable construction. In this changing era, investors who once viewed gold as the only safe haven are now diversifying their portfolios. Gold and silver have become the companions of economic slowdowns, while copper and aluminum are emerging as the engines of the future economy.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.